Hello investors, welcome to Simpli Stocks. At one time, the solar irrigation pumps theme was trending the most in the market, and there have been two main businesses in this theme, Shakti Pumps and Oswal Pumps. Shakti Pumps showed great business growth for a long time and created goodwill for its shareholders as well. After that, when Oswal Pumps got listed, it also performed well for a while. But today, the situation is completely different. Today, both these businesses have corrected by 35 to 45% from their peaks, and many retail investors are stuck here. So a big contradictory situation is here. We have been hearing that solar pumps as a market is very big opportunity, but at the same time, we are seeing a heavy correction in the winner stocks of this theme. So in today's video, we will find out whether this correction is temporary and short term, or if some structural issues have emerged in the segment that will persist in the future as well. Along with this, we will find out where Shakti Pumps and Oswal Pumps stand today and what expectations can we keep for the future from here. And yes, as a standard disclaimer, this video is not a buy or sell recommendation for Oswal or Shakti Pumps in any way. Our focus will only be on understanding the solar irrigation pump segment and the challenges in these businesses. With that, let's begin. Both of these companies manufacture grid-connected pumps, solar pumps, electric motors, etc. for farmers. They are also expanding into solar cells and modules. Their focus is on integrated manufacturing, that both companies make all the parts that go into a solar pump themselves. Oswal Pumps also has a module capacity of 570 megawatt, and a little more will come soon. Shakti Pumps solar and module capacity will come by March 2027. You can understand the need of these products by the fact that even today there are many farms where power lines don't reach, and their farmers have to make use of diesel engines for irrigation. But solar pumps are better than diesel pumps in many ways. That is why the government is putting a lot of emphasis on the adoption of solar pumps in India. But the problem here is that even though solar pumps have many benefits in the long run, the one-time cost of installing them is very high. Therefore, the government provides subsidies and support so that farmers install these solar pumps in their fields. For this, the government brought the KUSUM Yojana, under which these solar pumps are being installed across the country. In this, there is a subsidy from both state and central government. Apart from this, different state governments have brought their own schemes within PM KUSUM itself. And although some of Oswal and Shakti sales come from exports and selling some products to farmers directly, 70 to 90% of their sales come only through the PM KUSUM Yojana. And I told you right, the PM KUSUM Yojana works in two ways. It involves the central government as well as the state government. And state governments can also launch their separate schemes regarding solar pumps. So in PM KUSUM Yojana, Maharashtra, Uttar Pradesh, Rajasthan and Haryana are the biggest markets where most solar pumps have been supplied, and among these four, Maharashtra is the biggest market. Now look, the solar pump segment trended so much because it suddenly boomed after COVID when central government increased the budget for PM KUSUM Yojana. At that time, there were not many players, so companies like Oswal and Shakti saw very good growth. Both operated at high margins and their return ratios were also very strong. Along with this, the market is also very big. Today, there are more than 1 CR farmers or 1 crore farmers in India who do not have pumps. For this reason, the interest of institutional investors also increased here, that these companies will continue to grow rapidly with high margins for a long time. But that did not happen actually. In the last 1 year, many problems have surfaced in this theme, the impact of which we have seen in the share prices of Oswal and Shakti. Now we will understand the challenges of the solar pump segment and see what difficulties these two players are facing. So the first problem is that the government has not been able to complete its target set under the PM KUSUM scheme. Phase 1 is currently going on and its deadline is March 31st. But execution is lagging behind, and there is no update from the government on PM KUSUM 2 yet. As this sector is entirely government driven, there is a very big regulatory risk because of this. However, the management of both companies says that an update on phase 2 will come by Q4. If there is any delay in the announcement of PM KUSUM 2 Yojana, it can create a very big risk for slowdown for both of them. The second problem that has been seen is that in H1, meaning the months from April to September, there was heavy rain this time and floods also occurred in many places or areas of India. Because of this, Shakti Pumps installation targets were missed and results have been very poor. You will see that once this business used to grow at 200-300% year-on-year rate, but for the last 2 to 3 quarters, sales growth has not even reached 10%. Therefore, until execution doesn't pick up speed in Shakti Pumps, it has become a useless business from investors' perspective. Here, I would also like to talk about one more thing, that all this correction that happened in Shakti Pumps in the last 1 year could have been easily predicted by any retail investor. When their Q3 FY25 results came out, all the smart investors exited from it and started dumping the stock. But the retail investors who do not track businesses, they either stayed put in it and lost all their profits, or they bought more and suffered more losses. Now, humble request, if you are liking this video so far, please do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Now, along with slowdown, another very big risk of falling profit margins is also emerging in this sector. We will understand this margin compression through the example of Oswal. There is top line growth, but the problem is that both companies are facing a lot of difficulties at the state level. So many new players have come at the state level who are ruining the pricing in the market. I told you right that in PM KUSUM, the Maharashtra market is the biggest. There are somewhat strict rules for participating in centers tenders, but what has happened is that at state level, to promote small regional businesses there, state governments have kept the rules for participating in the tender very easy and lenient. Because of this, many small local businesses have emerged at the state level. Competition has increased in the segment and undercutting has started. Say if Oswal in a tender bids that it would supply a pump for 25 lakh rupees, then a small player would just put a bid of 20 lakh rupees. In such a case, if Oswal wants to win the tender, they will also have to drop their pricing. So realizations have fallen, and from Oswal Pumps to Shakti Pumps, heavy margin pressure has been seen in both. So where until a year or a year and a half ago, both these companies were running at their peak margins, we have seen a decline in those margins. This is a very big problem, because even though sales growth is there, but since margins are falling, in such a case, profit growth will not come. Last year, Oswal's operating EBITDA margin was 29.5%, which reduced to 25.3% in H1 and further to 23.7% in Q2. Therefore, although their sales grew by 74% year-on-year, there was a growth of just 48% in net profit. See, 48% is very good bottom line growth in itself. But in the future, when slowdown hits the top line, profit growth will become even worse due to margin compression. So this is a very big problem that retail investors do not understand. Retail investors just keep tracking sales and profit growth, but they miss the problem in the underlying business. The market is a forward-looking engine. And when institutional investors and smart money get a whiff that a problem might arise in the business after 6 or 9 months, they don't want to wait for the problem to actually happen. They start dumping the stock and take an exit beforehand. So this margin risk started surfacing in Oswal and Shakti Pumps from June quarter itself. So at one point in time, growth in Oswal was very good. Margins were at their peak. Return ratios were perfect. Then this business was so much in trend. And the market had a very positive outlook regarding it. But a high margin, high return ratio business always attracts competition. And new players also came. Now we are seeing that growth has left the sector. There is regulatory risk. New players have arrived who are ruining margins, and margins have actually fallen also. Because of this reason, Oswal and Shakti Pumps have fallen so much. You cannot say that these businesses have become undervalued after correcting. No, that has not happened. You also have to see that growth is not there anymore. Competition has increased in the sector and profit margins have also fallen. Today, at a PE of 2025, Oswal or Shakti Pumps are not undervalued. On the contrary, they are overvalued because so many problems are happening. And I have seen that retail investors often make this mistake. They don't look at sector problems or business problems and they just reach out to buy falling stocks. Whereas their focus should be on those sectors and those quality businesses that are doing well, where things are getting better, not on those sectors that are in a downfall. Anyways, until we get clarity on PM KUSUM 2 and most importantly on margins, institutional money might not touch these businesses at all. Along with this, we are also seeing margin compression in solar modules as well. So both of these players bringing their own cell and module capacity. But in the WebSol analysis that I shared with you recently, we saw how module prices are falling. Therefore, this is also a big concern that we don't have clarity on what ROI they will get from their solar plants where they have put so much investment. Finally, the third and biggest problem that has occurred is that of receivables. Money is getting stuck a lot in these businesses. Payments from the government are coming very late. Until a year ago, when the bull market was going on, all B2G businesses or any business where sales come from government orders or tenders, all such businesses used to trend a lot. But the market realized that even though sales and profit growth are coming in these companies, profit money is not coming back into the cash. The cash flow is not there. So the government is not releasing payments on time. We have seen this same problem in Shakti Pumps and Oswal Pumps. Plus, the payment rules in solar irrigation pumps are actually very bad. Once a solar pump is installed, the ministry will clear the money only after farmer operates that pump for 2 to 3 months. The government checks the operational data of that pump to make sure that farmer is not facing any difficulty in running the pump or if there is any problem with the pump itself. When that 2 to 3 months of data reaches the government, after that, the government will take another 2 to 3 months to process the payment. And even there, approximately 10 to 20% of the tender amount is processed after 6 to 12 months. You see, right? You did the work, you put your own money and got the solar pump ready and installed. But you are getting the payment very late from the government. And because the monsoons were so heavy this time, farmers did not use the pumps. In such a situation, Oswal and Shakti Pumps did not even have the data to show the government to get the payment approved. However, since October, the weather has been clear and work has come back on track. That is why in this screenshot, you will see that Oswal Pumps cash conversion cycle has increased from 135 last year to reach around 157 this year, meaning the money from the sale of pump is coming back into the business after 5 months. So this is a very, very big problem that the sale happened, but the money did not come back into the business. That is why I am telling you repeatedly that in the bull market a year ago, no investor was looking at these problems in B2G businesses. No one used to talk about cash flows, but now that perspective has entirely changed. Now investors have started talking about other fundamentals along with sales growth, and it is not that there are just 1 or 2 problems, right? Growth has left the sector, there is no update on PM KUSUM 2, new players have arrived, margins are falling, and it is also being seen now whether these businesses are able to bring in cash flow or not. Therefore, you should not take this correction very lightly. These difficulties will persist until Q3, meaning that the results for the months of October to December will also likely be bad for both of these businesses. Q4 will be a big trigger for Shakti Pumps and Oswal Pumps both. Firstly, all eyes will be on PM KUSUM 2 policy announcement. From that, we will get an idea of sales growth for the next 2 to 3 years. Secondly, by then, more information will be available on margins and cash flows, whether margins are stable or not, and whether the cash flow cycle is getting better or not. Because even if PM KUSUM 2 Yojana comes, but these fundamentals do not improve, then also institutions will not come back here and these businesses will remain out of trend like this. So I can say that for new investors, there is a lot of uncertainty and challenges here right now. As for the people who are already invested and are in losses, they will have to track these businesses closely for the next 3 to 4 months. If things don't improve, they might see even more correction. Now look, if you liked this video, do give me a thumbs up. Along with this, you can also subscribe to our channel, Simpli Stocks. We are bringing all this analysis to you for free. In exchange, we only ask for your support in the form of likes and subscriptions. If you support us by liking and subscribing to this channel, we will get more motivation and we will be able to bring more such good videos for you every week. So I'll see you in the next video. Don't forget to like and subscribe. Happy investing.